please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, so the 10-20 point gain has disappeared, and the reason is at the bottom of the screen. I mean, take a look at what's going on. 1 point lower on the Nifty, 10,497 is where we're at. I think the Dow futures have slipped sharply. I saw a flash essentially saying that the Dow futures are now down about, what, 300 points. So that basically seems to be the reason why the market is slipping and slipping fast. Half a point lower. I mean, so absolutely, completely gone in terms of gains. The high today, by the way, was 11,117. You know, which was basically almost back at yesterday's highs. I mean, and yesterday's high was about 11,171. So we came to within, I think, what, 50 points, 55 points of yesterday's high. And from there to come down into the red is actually quite something. We'll, of course, have more as the day goes on, but for now we are in the red. Mitesh Thakkar is joining us right now to take some questions. Mitesh, thanks very much. Good to have you with us here. Your sense on what's happening right now? I mean, sharp cut once again? Sharp cut at least from the highs.
Yeah. Yes, very much. I think, you know, we were at 10,600 and now we are just below 10,500. So we have dropped about 100 odd points, and I think, you know, we've been maintaining that take a negative stand. The indicator setup is still on the negative side. So I think rally should be sold into. I think it would become a slightly bigger and choppy range between 10,700, broadly give and take 30-40 points, to about 10,300. So the idea should be to trade more on the short side. I think, you know, also is the fact that, as you rightly highlighted, I think tracking Dow futures is very important these days. I think, you know, we give very clearly intra-market, while the market is live, I think, you know, you can see directions change.
Okay, well, Mitesh, what will your stocks be?
So I have two sell calls. Ambuja Cement, I think, you know, gave a good pullback to its pivot levels of around 260 and now is breaking down. So sell with a stop at 260, look for targets close to about 240 there. And HCC, another stock which is showing signs of a negative crossover on the indicator side, that's a sell as well. Keep a stop just above levels of 35.5 and look for declines to about 32, which can happen in the next few days.
Any areas, especially, I mean, sector, especially vulnerable to a correction now?
I think this could be slightly broad-based, but a couple of auto names still, you know, provide hope to me. I think Ashok Leyland and Hero Motor is something which possibly I would avoid shorting. But that apart, I think, you know, on stock-specific basis, anything which is giving fresh sell signals, particularly from the infrastructure side, finance side and cement side, I think are looking weak, and any sell signal should be traded on the downside.
The, metals, Mitesh? The steel especially, yeah.
So actually on the metal side, I have a slightly bearish view on the non-ferrous ones. In fact, I'm bearish on steel stocks as well, but it looks like that the non-ferrous pack might slightly underperform. Vedanta is something which I think should get back to levels of 310. It's tested that level already, I mean, in this week's volatility. But I think once it breaks 310, 285, 287 could happen on the downside. So the patterns are still on the negative side for the short term.
Okay, well, the US markets or the futures are now indicating an over 200-point cut for the Dow futures. So I think that's what is really stressing the markets out. And you can see that the mid-caps have given up all of their gains. But before we get to that and ask Mitesh about his comments on it, those are the City Union Bank numbers where the net profit is above what we were estimating. So it's around 155 odd crores versus an estimate of around 147 crores. The gross NPA has spiked up. So it's coming at around 3.3% versus 3.07% on a sequential basis. So that's on the gross NPA. It's a slight spike up that we're seeing on that one. And for the net NPA also 1.74% versus 1.76% on a Q-on-Q basis. So there has been some amount of worsening, but if you look at it on a larger context for City Union Bank, it has largely maintained in terms of asset quality over the quarters and over a period of time. In terms of an absolute basis, there's been quite a spike up in terms of the gross NPA. So that's coming at around 859.8 crores versus 780 crores last quarter. So there's been a significant amount of increase which is coming on an absolute basis for the gross NPA, and the net NPA too has come in at 448 odd crores versus 440 41 crores. So I'm assuming there could have been a larger amount of recoveries post the gross NPA, which has reduced the net NPA. But nonetheless, so those are the details that we're working with on City Union Bank. We'll get you more incremental information. That stock currently down around 1.5%, reacting to those numbers. But Mitesh, before we let you, before we get to the Twitter queries, in fact, what would you recommend in terms of how to trade the broader markets or the mid caps at this point, considering the kind of volatility that we are seeing even today? In fact, the Bank Nifty is also down 0.4% as we speak now.
Yeah, so I think, my sense is that yesterday and today morning, I think if we count the gap up, we had what we call as a V-shaped recovery, which is not very stable. I think, only 1 on 10, I think, it will work out nicely. The odds are pretty against it because there was no base building, no strong accumulation happening at lower levels. So I think the idea should be to sell on rallies. I think that stand should be maintained till we see some kind of base building happening at lower levels. For Bank Nifty, 26,200 is a good level to go short. Keep a stop of about 300 points, and there's a good chance that we might retest levels close to about 25,400. Similarly, I think on the mid-cap stocks also, I think as the Nifty and Bank Nifty approach resistance levels, I think good levels to cut positions, exit, or even if possible, if they're in the future segment, even take shots over there.
Okay, let's get some questions answered. And this is essentially Twitter user who's written in. He's got 400 shares of Prakash Industries. He's paid 210 rupees a share for them. He wants to know whether to hold or sell. Prakash, your thoughts, Mitesh?
See, despite the fact that I have a slightly negative view on the market, I think Prakash Industries particularly, individual chart looks pretty good to me. The long-term chart is very good. In the short term, it might see some consolidation, having rallied from 120 to about 250, 260 odd levels. I think it's a hold, clearly, if somebody has a 6 to 8 month kind of view. On the consolidation, if he wants to add levels of around 180, 175 would be the range to add. And I think on the upside, in the next 2 to 3 quarters, I do expect a price target of 250 plus.
Okay, and one more. We have Pallavi, 300 shares of PNB at 172, wants to know whether to hold or sell.
Here, I think, I would suggest that the stock is showing clearly no signs of a bigger or longer term uptrend. So I think the idea is that it might do a range of 130 to about 180. Anything closer to about 175, 180 should be a good exit opportunity. In fact, this month's high is around 175. So my sense is that I think closer to 170 or closer to her price, I think the investor should take an exit. I don't see much upsides happening in the next few months.
All right, we'll take a very quick break. Mitesh, thanks very much for your time, but we might call upon you as the markets become muddier in trade. So 3-point change higher on the Nifty. All the gains are gone. 10,500 is where the Nifty is at this point. The Nifty Bank is down 100 points, 1/3% lower at 25,715. Take a very quick break. We come back and more on market, stock sectors, views in just a bit.
Well, for the markets, we've recovered a tad bit in terms of the mid-caps, which we're still off the high point of the day. And the Bank Nifty also has seen a little bit of momentum from the downside. Anish Damania, CEO and Head of Institutional Equities, IDFC Securities, joins in to discuss the fundamentals of the market. Anish, hi. Thank you very much for joining in. Well, it's been a rough couple of days for the markets. How are you approaching it and what are you telling your clients?
I think volatility is a part of the game because you have been seeing a continuously rising market over the last 1.5 months. So obviously there was expected to be some correction. But sometimes what happens is that if the correction is very large, you suddenly start getting cold feet and you feel as if the rally is over. But what we feel is that corrections are always been a buying opportunity. So this is not the first time it has happened. So long as two things continue to bear themselves out, now that the earnings growth seems to be in place and flow doesn't seem to be that impacted, I think both those conditions would mean that markets would remain bullish, and we would kind of still go on to the same approach which we have had so far, stock picking versus taking into account what the market would be. So rather than saying that I have an index bet of so and so, I would say that these stocks would do better or these sectors would give you better returns.
Anish, here, good morning, Prashant here. I mean, here and now, what would you be doing? I mean, for viewers who are watching you, what would you tell them?
Yeah, so we have seen a fair bit of correction in the oil marketing companies.
Okay.
And they are down, HPCL is down about 25% from its peak. I think these are the companies which one should look at, because the stocks have corrected because there has been an increasing tension on the marketing margins. As in the middle period of elections, they had held on to the pricing. But since then, pricing has slowly moved, and since they have moved to a now daily price increase mechanism, you don't hear the big flashes on the news channels saying that price hikes have happened at 2 rupees or 3 rupees per litre. I think over the last 1.5 months, prices have gone up by about 7 rupees to 8 rupees per litre of diesel and petrol. So the hikes have already taken into account the fact that the margin spread has gone up from about the lows of 1.7 to now 2.7 rupees to a litre, and probably are higher than the average now. So once the realization comes through, I think the stocks would start performing. So this is one sector which we are fairly bullish on. We continue to be bullish. The other sector which we are bullish on is autos. Within that, two names come to my mind straight away. One is Motherson Sumi, which continues to remain our top pick, and Maruti Suzuki. There has been a fair bit of correction in Maruti Suzuki in the recent fall, and that is something which I would say is an opportunity to buy.
Okay. Anish, before we let you go, I just wanted your thoughts in terms of what's happening in terms of, say, MF flows or DII flows in general, because a couple of participants have brought up the concern that there could be redemptions that we could see from retail participants simply because of the kind of volatility that we've seen. Is that a legitimate fear that we'd be working with in 2018, and what's been your experience?
I think we can work on all the fears possible, but what we have seen is in the past times, we had not seen the kind of systematic investment plans in place. Just now, as we see, about 60% of the money is coming through systematic investment plans. So while there could be breaks on some of that, but a large part of it can continue to come through. So overall, I would say that till the time I see some concrete evidence that fund flow is waning, I don't want to take a call on the waning of the fund flow and stick my neck out there, because competing products probably are not giving that much return. The only thing which I would emphasize, and I have been talking about this for quite some time, is that if the business picks up, and business picks up in meaningful ways over the next 6 months, then we could see some tempering of flows into the financial assets. And that includes equities, of course. Okay,
all right, Anish, we're going to leave it on that note. Always a pleasure hearing your views. Thanks very much for joining in and talking to us. Some positive comments coming in from Blue Star from the conference call. So do watch out for that stock at the high point of the day. Take a break, but more on the markets and stocks once we're back. Stay tuned.
10 points lower on the Nifty, so 10,487 is where the market is at. The mid-cap index is higher, the Nifty Bank is down 0.5%. We're basically pretty much across all indices almost at the day's lowest levels. Let's get you some exclusive corporate story now. In keeping with Tata Sons chief N. Chandrasekaran's blueprint to create one Tata, we learn that the conglomerate is moving ahead with plans to restructure its defense businesses spread across various group companies. This could see a coming together of the Tata Group's defense interests under one group company. Nisha is joining in with these exclusive details now. Nisha, over to you.
Thanks so much, Prashant, for that. So in what could be the first of the big announcements in terms of the restructuring in the Tata Group under the leadership of N. Chandra for a leaner and a more structured and a one Tata and cluster group development business strategy, we gather from sources with direct knowledge that Tata Defense portfolio is soon to see a restructuring, and that announcement could be expected in a few days from now. Now, Tata Advanced Systems, a closely held company company of Tata Sons is the one which will really take the lead under the leadership of Sukhran Singh, who's the MD and CEO of the company, in creating a wholesome portfolio of the defense business of the group by attracting and buying out the various defense portfolios that several group companies have. Here I'm talking about two listed entities, Tata Motors as well as Tata Power, and also Tata Industries, Tata Advanced Materials. So these are the three units which are going to come in. Under Tata Motors, remember there's a large portfolio which has aero structures under TAL manufacturing, as well as there is vehicle, specialized vehicle for army purposes, that business. So Tata Motors, as I understand from sources, is going to retain a part of that specialized vehicle manufacturing business, and therefore the valuation comes to about 800 crore rupees. For Tata Power's SED, which is Strategic Engineering Division, which is into defense electronics, it could get close to about 1,000 odd crore rupees, and for Tata Advanced Materials, it could really give 1,000 odd crore rupees. So intra-group transfer of these businesses could be accounting to about 2,800 odd crore rupees to really create that powerhouse of defense under Tata Sons.
Okay, all right, Nisha. Thanks very much for that. So an exclusive coming in from Nisha on the Tata Group. But that's all the time that we have on the show. Stay tuned. Halftime report will take this news plus the markets forward. Stay tuned.